Coach Joe here with another banger series, and you guys know what happened last week. How the market gave us this wonderful risk to reward. Cause again, I called out this level. I gave this trade out on the live chat. I gave it live when I was trying to explain the strategy and all on my last video. So if you missed, my bro, you missed a whole lot of pips, a whole lot. Because even if my TP was at 75 pips, C price went all the way to give us 141 pips. If you wanted to hold here, it's a nice level. But if you held all the way to the close of the New York session, you'll be sitting at anywhere between 300 to 400 pips. So you see how crazy this strategy is. So it's a matter of where to take profit. It's not even a matter of stop loss or anything. So if you even took the first entry, you'll be sitting on 400 pips. From the second entry, which is the more conservative entry, like I said, you'll be sitting on the close of the market, sitting on still 300 pips, 320 pips, or 26. So see, ROI is just crazy to get this in a whole day after getting this this and this also. So you see, at the end of the week, even if you eventually take a stop, because trying to catch these levels can be like you need a lot of experience. So even if you need to pay the cost of an experience for the market, you know that you'll be getting at least anywhere between 60 to 400 or 500 pips, depending on how or where your take profit is, right? So it's wonderful, 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 guys. I'm really, really excited about this. And even though this level was one of the take profit levels, because price kind of reacted with the sell. If you look closely what price did around it, reacted with the sell. So I'm just going to be walking you through the management, and maybe your take profit or your stop loss will be at break even at this level. But once price breaks above this, then I'll always encourage you to move your stop at least to where it broke off from the last low or the last support where it broke off from. Then you see price shooting all the way to the top, and when you see things like this, it makes me marvel at the entry and the exit technique of this strategy. It's simple, totally simple, guys. So what I said the last time, for those that missed the last video, I would like you to go and see what I said about this. This is the whole entry technique to catch sells, buy, and a lot of sells. I always do this for a buy trend. For a downtrend, it's gonna be like the reverse, where you just you sell more than you buy. Yeah, you just buy more than you sell. That's just the way it is. So if you can spot the triangle, if you have a support around that area, then you know that okay, price is gonna be getting lit from down here, because from this triangle, I'll note that this is a support, the base. So I'm just gonna be leaving that here. You understand? So from there, I also see that it is the New York session, and gold is going to be reacting massively. So from this double top, I'm selling to the liquid zone where I'll buy. So you see, I've cut 2 trades already, holding to the take profit, which is also the lower mid or the higher mid of the triangle. Wonderful, wonderful. So we are on to the next day. The triangle has to be drawn while looking out for the highs, the highest point that day. It has to be drawn for both sides. So it's just more like trying to pinpoint where the top is, so that if you eventually get your triangle pierced, you could be expecting either a double top, or if it gets to the midsection, which is around there, there's also a support level for you to exit a trade or maybe take the sells. So price needed to break through this support, like I said in the past, then buy, and when it bought, it sold. So if you caught this sell around the New York session, because look at the time, sorry, you got it, you'll be getting down to the low, and also being able to catch buys, or maybe if you miss that buy, but because you have taken it to the low, you need to be waiting for price to break above this low to then hit the buy straight up to any of these levels to be taking your profit. This should be at least 40 pips, so anywhere between 40 to 500 pips. This strategy will fetch you that. So on this wonderful trade, when the market was at its peak, this was most likely the highest point before the London session, pushed us through this, trying to violate everything. But if you extend your line to what it is now, because it's no more at that level, you see that, all right, the triangle has been made, and this is the highest point, right? So it's the matter of what price is going to do at that moment. So price decided to break to the low, and yeah, this was one of the take profit, like I said. Even if price got to this point and sold off, which he tried to do, but the buy pressure was so much, he had to break to that level. He did the same thing here. He tried to sell off, but the buy pressure was too much, so he broke through that level. So it's all about knowing where these zones are, trying to spot them. I always recommend trading one pair with this, because if you trade a pair with this, you know that, okay, every day I have a trade. It's all about managing that trade. It's all about spotting that trade. But when you have too many pairs, and you are trying to get an opportunity, you might end up mismanaging them, or one may give you money and the other one take it. So I just stick to gold, because then again, I'll try to see when I can drop the risk management video, so that it will be easy for everyone. Yeah, how to calculate the pips, because I can do that. All you need to do is, I think, if the price is buying at 2030, then from 2030 to 2033, that is 30 pips on gold. Yeah, stop loss 30 pips. But if price is trading from 2035 like it did last week, trading from 2035 to the level we had, from 2035 to 2050, no, 2035 to 2050, that's I think 150 pips. All right, so from there to 2070, that's a whole lot of pips. I think 400, like I said earlier. So it's all about knowing these calculations, knowing when to take this trade, spotting the entries, and being matured enough to make money from these trades. Because like I said, these are killer trades. Most of them may look very overwhelming, but then they are killer trades. I promise you, it's easy to learn. It's fascinating. It's really something, guys. It's really something. So what I did was, I did not eat from this trade alone, because after giving you guys the trade on YouTube, I actually did give this trade to my free WhatsApp channel, because I'm still trying to build my Telegram. So I should be done by 2024 to start the year, kicking everything. So from that, I was able to make sure I made the inner cycle eat, made the free channel eat, and you guys as well on YouTube. So join the inner cycle, guys. Learn how to do this by yourself, because in as much as you'll be getting free trades from time to time and making some money for yourselves, you should also know how to do this, because then again, I might not be available to always spot entries for you, but when you can see it, you know why I'm taking a trade. Even if I'm always there, you know why I'm taking a trade. So stay positive, guys. Let me know in the comment section if you actually did took this trade when I posted it, and if you did, how was the feeling like? Were you overwhelmed by the profit and all that? So let me know what kind of videos you want to see from me. Detailed strategy, what is it, guys? Because I have other strategies that plays with the timing, the sessions we have in the market, where markets will be ranging through the Asian session, and where it breaks on the London session. Is all about knowing where to enter. That's the strategy, guys. So there's a lot of ways you can go about this, but it's all about the one you are most comfortable with. but all of them promise you is pure liquidity, support and resistance, pure, bro, pure. So it's easy for all of us to understand and get the point. So stay positive, guys. Keep it locked in, and peace. Peace till when we meet again, guys. So take care.